September tends to be the absolute worst month for investors. So if that's the case this time around, how should we protect our money? Let's go ahead and break it down. Now, there is an entire history of why September is so bad, and a part of it, I'll be honest with you, is bad luck. So if you want to know the entire history of why that's the case for September, definitely go ahead and check out this video after this. But let's just go ahead and set the table. Context is always important here when we talk about September and its averages. So first, at the time that we are doing this video, first off, there's thunder and lightning out, lightning, however you want to say it. It's a storm outside, okay? So y'all might hear some thunder and lightning, but on average, okay, and we're just making it super simple. Right now, the stock market is up roughly 18%. So that's what, 2.25%, 2.25% on average, okay, every month up until now. And I'm recording this on Labor Day weekend, so stock market's closed at the time I'm doing this video. Now, obviously, every single month, the stock market has not been up 2.25%. We're just making it very easy, simple math, okay? Now, for September to be the worst month so far this year, this can go a bunch of different ways. It could be every month it was 2.25%, and then September was just 0.5%. Worst month so far. It only grew 0.5%. That would make it the worst month. That could happen. And that would be true, and that would be the headline, and everybody would be hating the stock market. That could be the case. It could also be down 5%, and the stock market could fall, and that would be a crash, right? That would be cause for a crash. People would absolutely be upset, and they would be right to be upset. It could go either one of those directions, but that is the case here, right? Now, the first case of the stock market being up, but only up 0.5% is still up. I'll take a gain, right? But that's how this thing can go. You can still make money, but not as much as others, and still be the worst. So I want to make sure that I make that case and throw that out there. Being the worst month doesn't always mean that you lost money, okay? So just want to be transparent for everybody. All right. Now, how do you protect yourself if that is the case? If we are going to be in a crash, and first off, there's no guarantee there's going to be a crash this time around, but there is an election. There is a little bit of, question marks out there. So we want to be ready. So we ain't got to get ready. All right. So first thing is, do not panic. Regardless of what happens, do not panic. Panic and profits do not go together. That's not a thing. I'm gonna just throw it out there right now. Panic and profits do not go together. Don't panic buy, don't panic sell, regardless of what happens. Whether the stock market is up or down, do not panic buy, do not panic sell. I'll also say that doing nothing is also a plan, and it is a strategy. It's also my plan and my strategy for those that have not noticed at this point in time. Again, I only buy and sell in June and December. That just so happens to be my schedule, which is every 6 months, right in the middle of the year and right at the end of the year, regardless of what happens. It is extremely, extremely rare where I'll step in and do something that is not in those particular windows. A change in CEO was one of those where I sold Chipotle. Outside of that, that's really about it. I can probably count on one hand when I've ever had to step in and do something outside of that. Like, that one time, that was about it. So those just few rare scenarios, but that's it. And sometimes the market will fall and have a terrible day, and I don't have to pay attention and I don't have to react, and that keeps me out of my own way. Yes, I've been doing this for a while. Yes, I've managed over $140 million as a financial advisor and all that kind of credentials, all that kind of stuff, but I'm still human. I still fall into traps. I still make mistakes. We all do. But keeping myself away from the screen sometimes is still the best strategy at times. Just because something happens in the market, just because you get a notification, just because you saw something on the news, does not mean that you have to react every single time. You don't have to move. Okay, you don't have to move, and panicking, profits, those two things do not go together. The second thing that you do want to consider is you could buy, right? Second to doing nothing, buying or dollar cost averaging, that is buying on a consistent basis. And I would argue, just setting this up on a schedule so you ain't got to touch it is also a strategy as well, which is what I do. So for me, whether it's on public or, you know, 401k, which I think most of us do have or do, you know, conduct right now, is you put in your 15%, your 10%, whatever it's going to be. If you're on public or even on Cash App, I've done a video on how you can do this on Cash App on whatever budget you have. 10, 15, $20 a week, $60 a week, whatever it's going to be, where you are consistently buying on a schedule and you ain't got to touch it. Market falls, you're buying more. Market's up, you still buying. And I'm not really concerned about what's going on, and I honestly don't know, and I personally don't care. I know I'm buying quality, and when it's time for me to come back and review my stocks and review my portfolio, that's when I'll come back and adjust those things. That simple. Nothing has to change, because again, you got to remember that we all say buy low, sell high. If September is your opportunity to buy low, then go buy low. Why run from that? I don't know why we do that sometimes, right? We all say we want to buy low, sell high, stock goes low, you don't want to buy. Also, people who felt like, you know, a sky high stock like Nvidia or SMCI, I think it was like Super Microchip Conductor, whatever it was. It's not a stock that I currently own, but it was a stock that absolutely took off. I don't know where it is now. Okay, we haven't really covered the stock as much, but it came down in price, right? If, it's a big if that was a company you really love and it came down in price, maybe this is your opportunity. Okay, that's not me endorsing the stock. I've not done my research on it. But if that was a stock that you felt was so expensive and it's just, that stock is way too high, I don't think it's you know, I'm not going to pay that price for it. But if it has come down and you feel like it was good then, but it was too expensive, this could be your chance. This could be your chance. So we come up with these you know, these price ceilings on what is too expensive, but when they come down in price, it's too low. And that's the thing. Like, we don't have this is the price it's supposed to be, and then that's the price you get it at. So it's kind of interesting why we kind of psych ourselves out around that. So that's why I suggest you should probably just have a schedule where you're just dollar cost averaging and just buying on that consistent basis, so you're not shifting the bar and, you know, not buying when you think it's too cheap, and not buying when you think it's too high. Just always be buying, right? And you're automatically buying more when it's low and buying less of it, but you're still buying even when it is high. So you're always be buying, right? So that's what dollar cost averaging is. Set it on a schedule. You can set it and forget it. That is one of the best time proven strategies to invest, especially if you are doing it with index funds. Next on our list is investigate. Okay, investigate specifically why something is falling, because you don't just want to buy everything. I think that's where a lot of people get kind of mixed up, where they just be buying stuff. Was like, oh, the stock is red, this thing is down, I'm just gonna buy across the board. You don't want to just do that. Okay, what I like to do, especially when the stock market is down, we've talked about this when I bought a ton of stocks that were down in 2020 and made a lot of money about a year and a half later. But the thing was, why was that stock down? And was it really down for no reason? That is the key. So for example, the Fed could raise rates. That is a possibility. And if they do that, or I'm sorry, the Fed could cut rates. If they cut rates, that could help some companies. It could help banks, right? They can loan out more money. It could loosen a bunch of stuff, and it could help some companies loan or take out loans and grow their companies, hire more people, so on and so forth. That is something that could happen and have a material, true effect in making the stock grow. That makes sense. Okay. Now, on the opposite side of things, let's say the Fed does raise rates, or they did raise rates in the past. That did hurt companies. Remember, there was a time when they did raise rates and some banks failed. That did happen. That made sense, right? It wasn't great sense per se, but that was something that did happen, and it did have an impact on the stock market and the banking industry. So they'll say, hey, I see why that stock is falling. Let me not buy in that particular area. We did a whole video on why we shouldn't buy those particular stocks. Well, if, let's say, the tech sector just starts to fall and there's no real reason as to why, just, the stock market, just, they don't like stocks right now, then Nvidia or Microsoft or Apple is just getting punished for no reason, that might be the stock I want to start buying, right? So let's say if I'm looking at Apple, now I think Apple right now is not doing as well as it used to because they don't have a place to grow. So this might not be the best example, but let's say Apple isn't doing well because their growth numbers are good, but people just don't like it right now. Well, if you start to see a stock that's falling for no true reason, no lawsuits, the numbers off the charts, but it's just not just falling out of favor for no reason, those are the stocks you want to buy. You've done your research, the stock performance is fine, like the numbers, the fundamentals, the sales are good, but it's just not making as much and the entire market is falling. Those are the ones that you want to buy the dip on. Too many times talk about buying the dip without really specifying what to buy the dip on. Everything ain't a dip. Some things are a cliff. Okay, that's a sermon in and of itself right there. Okay, everything ain't a dip. Some things are a cliff. So you got to know the difference between those two things. Look at the things that are just fine but are falling for no reason, being drugged down by other things that should be falling. Nike is something that should fall. Okay, that should be falling for a reason. Your sales are falling apart. What about Abercrombie and Fitch? Are they dropping just because Nike is, or just because the entire stock market is? Okay, that could come down in price. Perhaps I'm buying something like that. If you've done your research, if you feel that stock is worth buying, that's something you may want to investigate. If you feel like there are some other things out in the stock market that you think are worth buying, some things that you absolutely keep on your radar, especially in a month like this, then this is the video that you want to check out next.